Do you feel like it can be a common mistake from a retail investment perspective to find a shipping company with a very nice discount on their valuation, but there's a reason why it's there? So when they invest and then don't see, the stock picking up, that can be like a common, situation to get in.
Yes, it is like the most common value trap, like that everyone walks in and they can say, "Wow, if they just sold the ships, for cash, they'd end up with, they in some cases double their money. The stock price should logically double. Um, However, most of those management teams are incentivized not to sell the ships because there are related party transactions for management, et cetera, where they're like, no, my interest is actually to keep running the business. And I think that's there is often a wake up call um, for some of those investors when they get in and they realize there is no catalyst to close them, which sort of I come back to, like, sort of what I think is an interesting sort of investing or trading thesis around shipping these days. It's like finding those M&A catalysts, finding those shipping companies where there's a reason for it to close. If you looked at, cool, why should, Eastern Pacific leave it standing out there if they could take it private at such a discount? And I think NYK and the Seaglum family probably have a similar outlook, where the benefit of being public doesn't justify their stocks being marked down to the level they are. And then, even when, to bring the conversation full circle, when Hanwha bought Philly Shipyard, you know, they bought it fairly close to cash on the balance sheet of the shipyard. So they were finding those interesting M&A catalysts, I think, is compelling. But there's a lot of, what I'll call value trap shipping stocks out there where there's no catalyst that will close that valuation gap.
Yeah, I think that's a strong summary. If you had to pick, favorite shipping segment heading into 2026, I know, the answer can change giving a new week, but from this information you have today, what would be like the favorite segment that looks fundamentally strong into 2026?
This is probably going to be a little bit of a niche segment, but I do think LNG bunkering is something that I think has some tailwinds, despite the IMO sort of 1 year push on the net zero framework. And I think that's because I see it as a middle ground in some ways towards the objections that were raised to the IMO net zero. And I sort of view in the US called out LNG as not being given enough credibility. If you look at all the ship owners that sort of protested net zero, a lot of them were LNG owners or owned LNG powered vessels. And so I think there was a general view that, there was an existing order book of LNG powered vessels. There was a lot of investment here, and net zero wasn't reflecting that. So I see LNG as a fuel being sort of the most likely compromised path forward. And I think the bottleneck still exists in the vessels, the bunker vessels to deliver the fuel, as well as actually the berthing slips to get into these LNG terminals, so that you can load a bunker vessel so that it can then deliver to a vessel. So it's a sector that is attracting speculative new builds, I think, as you've probably seen fairly recently. But there are also speculative new builds that are then signing 5 to 7 year time charters with oil majors before they deliver. So that's a sign of there is a very deep creditworthy appetite for these vessels when they're coming to the market. And so I think we're probably still early days in the build out of that fleet.
Great choice. And, any comments on the tankers and the market we have seen? Because, of course, lately it's been quite strong, but is it like a fair assumption to say that the truly super cycle has been stolen by the dark fleet, or is that too simplistic way of, answering, or can we still get a super cycle?
I think I think super cycle is always on the table, in that, it's hard to say. The probability of any event in shipping is never going to be zero. I do, it's, I think the dark fleet, as you rightly point out, is a big variable there, and sort of how does the dark fleet come out in a potential peace deal with Ukraine? There's, I think, a lot of, let's just, get calling back early in the conversation. U.S. shipbuilding was a big priority. It was going to be funded by port fees on Chinese-built ships. So all of a sudden, there's a complete 180 in the U.S. administration cutting a deal. I also cannot put a probability of zero that the U.S. administration finds a way in a peace deal with Russia to somehow bring the dark fleet back into the fold. And in that situation, I don't know what happens. So, it's that is my I'm not, black swan's over an overused term, but like my lingering fear.
Yeah, got it. But still, so neutral on tankers in general, or?
Um, I wouldn't want exposure to the asset prices. I think that's like, I think there's, if you can take shorter term exposure, perhaps through earnings or more asset light, ways. I think that makes a lot of sense. But the length of duration, that if you buy a ship, you're probably long realistically the ship 3 to 5 years. You're not going to, a quick sale of 1 to 2 years happens very infrequently. So if there was ways to just get long the earnings potential of the ship without exposure to the asset price, I find that compelling. So, I mean, I think, if, you bring it back to the equities, obviously Hunter Group, has that sort of type of exposure, that, that comes with, can come with periods of a prolonged downturn, but, it can really sort of pay off nicely when the timing works in your favor.
But just a final point on that, given the latest years we have, lessons from sanctions, impossible in a global world, or because I see, a lot of good debates like sanctions, is it just like anything that can work fully, or is it, do you have any strong opinions on sanctions in general?
Strong opinions? No. I think anything that creates, distortions in the shipping ecosystem creates the possibility for someone to make money. If you think of that, absent any intervention, the market naturally solves for an equilibrium. I crudely think of it as an Uber algorithm that's completely run by people on WhatsApp messages, like sending badly worded, exchanges across the world to fix cargoes. And eventually, the cheapest ship, available to move a certain cargo wins out. Anytime you have a sanction or any other distortion, all of a sudden there's the potential for surge pricing. So I think sanctions have this interesting benefit of, adding complexity to the system, which usually makes the system more inefficient, which means there's more cash to be taken out of the system. And then I think the sanctions, whether they've been successful in their objective of, curtailing their intended national target, is above my pay grade. But I think there are a lot of people that have made a lot of money, decided that taking a moral stance on it one way or another wasn't worth it.